Hello everyone, I'm Michael Ruger. I'm the managing partner at Greenbush Financial Group. Got a lot of questions over the weekend from clients about the COVID cases spiking and is there a chance that the economy could go into almost like a double dip recession with a big market sell-off in the next few weeks or months. So I'm going to share with you today some of the key indicators that we're watching to kind of track the COVID cases as well as what the economy is doing behind the scenes, and also to kind of start to gauge a timeline as to when a recovery might look like going forward. We're also going to talk about, we've been talking with experts about the treatments and the vaccines, kind of our insights into that, as well as some of the government spending and stimulus programs that are kind of pending behind the scenes that we're waiting to see could go through should the economy end up in maybe another full shutdown measure just to get it to the other side. First, I'm going to discuss some of the key indicators that we're tracking. Now, we are looking at GDP, consumer spending, unemployment, the traditional economic indicators, because we still need a barometer to where is the economy. We are a consumer-driven economy, so what are consumers doing? Are they still spending money? Because that gives us a pulse. Regardless of what's happening behind the scenes, what are consumers doing? And also, what is this road to recover? Is it strengthening? Are we on our way out, or are we going the other way with the economy overall? So even though it's not dominating the headlines, we are watching those behind the scenes. Now, it's undeniable that these COVID tracking data is also very, very important. So the daily cases, hospitalizations, the daily death rate, all those things are going to be very material. Now, while everyone is going directly to the daily infection rate to say, wow, look how high it's spiking, when we talk to medical experts, they tell us the big thing you want to watch is the hospitalization rate and the number of people that are in the ICU. The reason why they're telling us to track the hospitalization rate instead of the daily infection rate is a lot of people could get the virus, but as long as the treatments are working and they're recovering before it gets too severe and life-threatening, that means the treatments are working, the healthcare system is getting better at treating the virus, which means we may be closer to an actual recovery out of this. It's only when those hospitalization rates spike, where people in the hospital for a long period of time and eventually they progress to the ICU where it becomes truly life-threatening, that could lead to the increase in deaths, which is what they're trying to really work against, which could create some of these more extreme like shutdown or economic prevention methods to stop the spread of the virus. And when we look at the hospitalization rates right now, the numbers unfortunately are not great. I mean, they're up over about 80,000 right now, which in the previous two peaks early in the year, it only got up to about 60,000. So this is a concern at this point because the capacity of the healthcare system could get tested, and we just have to see where these hospitalization rates go from here. If these trends continue kind of on this negative direction with cases and hospitalizations mounting, the government could step in and say the best way to treat this is we're going to go into the second shutdown type scenario. Now, if that happens, the market is going to be watching very closely to the government assistance in the form of stimulus package that would need to come into the market to basically serve as a crutch as we're trying to get to the other side of this thing. Now, before the presidential election, they were working on a package that included another round of checks to individuals from the IRS. It had more PPP money being funded to businesses, and it also had some of those enhanced unemployment benefits that the market would be looking for to provide financial assistance in the instance of a second shutdown. A quick note about these government stimulus programs. So we got a preview of them while they were negotiating them before. So for the checks from the IRS that individuals received, it seemed like they were keeping the thresholds the same for your income. So basically, if you got one before, you'll probably get one in this second round, the way that they've negotiated it so far. The amount could be different for yours or your dependents, but that is yet to be seen. The PPP loans, which are for the small businesses, those were going to be another round of funding, but there were going to be more restrictions as to who is going to be eligible. And this round, it looked like they were going to put restrictions that say you have to show a drop of revenue of X amount in order to be eligible, which that wasn't there in the first round. And for unemployment benefits, while it was lucrative the first time around at that bonus $600 per week, it looks like they were going to be targeting a lower amount, even though there might be a bonus amount that could be in play in the second round of stimulus. In our opinion, probably the largest risk to the market right now is if the virus cases continue to mount and then the government responds by shutting down the economy again. If the government does not act quick enough to provide that financial assistance because they're still negotiating back and forth, there could be a lot of damage done to the economy in that period of time, which could push out the recovery longer than expected. In that case, you could see a bit of a correction from the stock market as it tries to adjust that timeline. But we have to remember the market is a forward-looking animal, which means even though there's some clear and present danger and the variabilities of what's going on right now, as well as the negative headlines we're definitely going to probably see in the upcoming weeks, it's going to look forward and say, within the foreseeable future, do we see a high probability recovery with the introduction of more vaccines, more treatments, with government stimulus? Can the market foresee a recovery and a bridge to get there? If it can, you might not see that huge take back in the market in the short term because it realizes the path to recovery is getting closer. What does this mean for investors? Well, if you're a long-term investor and you have a long time horizon to go, you might not be making any adjustments right now based on what's going on with the pandemic and the markets. Now, if you're a more conservative, short-term investor, then you just got to make sure you're keeping the right balance between risk and return in your portfolio, given the variables that are still at large out there in the economy and the markets. To go back to that initial question of what are the chances of potentially a double dip recession happening with the market, honestly, it's anyone's guess, but when we look back at what created the sell-off at the beginning of the year, in March of April 2020, S&P dropped by like 34%. Again, market forward-looking animal, it didn't know what to look for. That's when the COVID just showed up. We didn't know what it was, how fast it was going to spread, how to treat it. There were no vaccines in the works. Like there was no way to know what that timeline looked like, where it seems like now, even though we have a second wave of cases coming up, we have a better handle of how to treat it. We know how it spreads. Just like the market can actually build a timeline to the end where we didn't have that before. So what that kind of says to us is, in our professional opinion, is there a likelihood we could see another dip? We don't know, but the likelihood that the magnitude is the same, that 34% quick drop, it seems less likely this time around because if you look at it, it seems like we're closer to the end than we are the beginning of or the middle of this pandemic. So I wanted to kind of close by talking about some of the data we've received from some experts on where the treatments are at, the vaccines are at, and it is encouraging that the FDA is almost weekly now approving different treatments for emergency use on US citizens. There are still some challenges because when you start learning more about some of the vaccines, like some of these promising vaccines, one in particular, has to be stored at negative 70 degrees Celsius, which means much colder than a commercial freezer will go, much colder than most of the freezers that are on trucks. So it becomes a distribution challenge that how do we get it from the drug maker out to the general public and do that on a widespread basis. So that's one of the challenges that are out there. But again, the encouraging thing is they're getting drugs out there to help treat the virus, to hopefully prevent people from getting the virus. And undoubtedly, the market is going to be watching very closely after these treatments have been announced, how they are working out there to determine what the road to recovery and the timeline might look like going forward. Thank you.